Hi, I'm Phillip Smith, financial planner with Tidepool Wealth Strategies. Thanks for dropping in. Today, we're wading into the tide pool of financial knowledge to explore a powerful yet often overlooked strategy, strategic charitable giving. You've built up a comfortable nest egg and now want to make a meaningful impact. You've always been generous, perhaps supporting your church, local charities, maybe even your alma mater. But now you're retired or close to retirement. You've probably heard something about using your retirement savings strategically. Sounds intriguing, right? What does it actually mean? Before we go further, let me say this. These strategies only matter if you're already charitably minded. If giving isn't something that brings you joy or purpose, this may not be the lever to pull. But if generosity is part of your DNA, this is where tax-savvy planning can really shine. In this video, we'll discuss qualified charitable distributions, donor-advised funds, donating appreciated stock directly, and how strategic giving can enhance your enduring legacy, potentially slash your taxes, and genuinely impact the causes that matter most to you. But we're only going to do this at a high level. Now, let's be honest. Directing your dollars away from Uncle Sam and into the hands of your favorite charity, who doesn't love that? Let's kick things off with qualified charitable distributions, or QCDs. Once you reach the age of 73, current rules, the IRS kindly reminds you to take required minimum distributions, or RMDs, from your qualified retirement accounts. Now I'm referring to your traditional IRA, pre-tax dollars in your 401k, 403b, 457b, or even your TSP. These distributions usually increase your taxable income. But here's the fun part. If you don't need the distribution income to manage your expenses, then you can direct these distributions straight from your IRA to a qualified charity. And guess what? No taxable income. Yep, you lower your tax bill and support causes you genuinely care about at the same time. It's not a bad deal. Now, next up, donor-advised funds. You could think of these as your personal charitable checking account, but with tax perks. You contribute assets like cash, appreciated stock, or even real estate, and you get an immediate tax deduction. Then you can distribute those funds to charities at your convenience. It's like running your own mini foundation without having to host gala dinners or learn how to golf. And here's something most people don't realize. Your donor-advised fund can keep giving even after you're gone. You can name a successor, often a child or another family member, to carry on your charitable mission. Or you can instruct the fund to make final distributions to specific charities. Either way, you're planting seeds for generosity that last well beyond your lifetime. Now let's talk about directly gifting appreciated stock. Here's the scenario. You bought stock years ago and it's grown significantly. Congratulations. If you sell it, depending on your income, you may owe capital gains tax. But if you donate that appreciated stock directly to your favorite charity, you avoid paying capital gains taxes altogether and might even score a tax deduction for the full market value of the stock. It's tax-savvy generosity. Donor-advised funds and gifting appreciated stock are particularly handy if you have an unusually high income year. Say you sold your business, or you cashed in some stock, or you just hit the financial jackpot. Awesome. You offset the higher tax bill while spreading out your charitable giving strategically over time. It's pretty smart. At its core, strategic giving is all about aligning your financial and philanthropic goals. It's generosity that's both tax smart and deeply meaningful. So here are some ways you could put this into action. First, review your upcoming required minimum distributions to see if qualified charitable distributions could work for you. Second, consider a donor-advised fund if your income tends to fluctuate or you have appreciated assets just lying around. Third, explore gifting appreciated stock. Directly, especially if you hold significant gains in your portfolio. And finally, talk with your spouse and your family about integrating strategic charitable giving into your retirement plan. Make sure your legacy truly reflects your values. And remember, it's not about having the smartest financial advisor or the most money saved or the highest probability of retirement success. The perfect retirement plan for you is the one you act on. Thanks for tuning in.